Thank you so much. It's quite a pleasure to be here, and I want to get straight to it because we're so lucky to have Mr. Faber here this morning, the chair of the ISSB. And without any further ado, let me just ask some questions. So welcome, Mr. Faber. Thank you so much for joining us. I know the ISSB was formed 2 years ago. Can you maybe summarize the progress to date for us here? You have an audience of hundreds internationally, and we're all looking forward to hearing from you.
Thank you so much, Allison, and thank you. It's an honor to be interviewed by yourself, by the way. I'd be even more happy if I was in this room with Ronald, Nick, and so many other friends and partners that we've been working on the impact side of things for so many years. So yeah, my contribution in many ways to what GSG and many others are trying to do here is bringing transparency on ESG disclosures overall and sustainability disclosures so that overall investors, lenders, capital markets, and potentially beyond can have the appropriate data to their work. And indeed, ISSB was formed at COP26. We've been working really hard on the basis of a consultation that told us climate first, and we started with climate and a general requirement. We finalized the publication of both standards in June last year. The IFRS S1, so ISSB S1 standard, is the general requirements, which is basically the alphabet and the grammar of what we do. I just want to say that what we're developing is just another ESG or one of the 500 ESG metrics around the corner here that have been developed over the last 10 or 15 years. Our goal is to end the alphabet soup and provide one unique, comparable, reliable, assurable language for ESG around the world and for the use by capital markets. And so we are designing this as an accounting language, not as an ESG concrete or discrete suite of disclosures. You will find that in our S1 standard. S2 is about climate, and that's basically about bringing the transparency on the long-term, short, mid, and long-term climate risks and opportunities, as well as in the company, but also alongside the whole value chain. And this is where I think there is a link with impact. Those standards were endorsed by the board of IOSCO in July and welcomed by the Financial Stability Board, which declared that the publication of our climate standards was the culmination of the TCFD task force and brought the TCFD framework to us and asked now us as Financial Stability Board to monitor on their behalf the implementation of the climate disclosures in the world in the future. So we're tasked with that now. And we are now entering into the phase of the adoption journey for S1 and S2, which is super exciting, but a daunting task as well. So that's where we are.
That's an impressive amount of progress in 2 years, and I so welcomed IOSCO's acceptance and adoption of what you've been doing. Now that you have S1 and S2, they've been issued, can you maybe talk to us a little bit about what you think the main challenges are going to be with implementation of each of those standards?
Sure, Alison. I think, in many ways, that's a new language. And it will only become a perfect language that we speak fluently if we all use it. So we have created a lot of proportionality and scalability to allow everyone to jump into the river and start crossing the river, including on things like Scope 3 emissions, for instance, which has been a big debate, as we all know, whether they should be there or not. We've decided they should be. Financed emissions for banks, the Scope 3 of banks is there as well. And we are simply saying we will not be perfect from day one. Regulators will have to bring safe harbor statements. Assurability will be there. The ISSB is working right now on the audit standards and the assurance standards for those, but it's going to be a journey. And so I think the main challenge is to open chakras, basically, for the accounting profession, for the firms, for the chief accounting officers, for the CFOs to really start that conversation with the CSOs, with the chief procurement officers, unpack those conversations to bring them to a level of, well, maybe there will be estimates, and of course we authorize estimates. We even say on scope 3, for instance, you can have a range as opposed to a fixed number, and you can refine that over time. But it's much more important that you're able to speak about what is 90% of your climate risk exposure, which is scope 3, as opposed to not having that conversation because you're not perfect yet. And I'll finish with that. I've been signing accounts as CFO and CEO and chair of companies for 25 years of my life. And I know that we want to be precise, but giving a fair representation doesn't mean that there is a number that is a true number. 80% of entries in accounting are estimates. We need to reappropriate our ability to use estimates. Intangibles are all over the place in the financial statements. Goodwills are 80% sometimes of large multinational companies. They're all about estimates. So we need to make sure that we understand that we will need to make the same estimates by bringing climate first and maybe other things, of course, later on, into that framework of accounting. Opening chakras of accounting, I think, is the biggest challenge, and learning that language together. So I'll stop with that, but I think there's a lot that we are currently doing on capacity building to ensure that the professions and regulators and preparers can indeed start in 2024 using our standards.
I would echo your views on scope 3, and as you know, that's a heated debate going on in the US as well, and so I'll just go on record saying I strongly agree and support the addition of that, and I agree with you that we have to start somewhere. And so, I would support any number of safeguards and approaches that would allow companies to begin to really get on this journey. Many of them far along the road already, but would allow companies to begin this journey of understanding how to go about disclosing and getting transparency and decision-making capacity around the largest part of their admissions. So thank you for that. And then let me ask you this. Everyone is interested to know what's next for ISSB. It was quite a project getting out S1 and S2. And in particular, of course, this audience is very interested in understanding whether you have plans for standards that may be linked to social topics. So if you could tell us what's next and whether you have anything in mind connected to social topics.
Thank you, Allison. And to your earlier comment about scope 3, I think it's very important that regulators around the world authorize companies with appropriate protection to indeed release this information, because it's an ask that we have from the Financial Stability Board, the central banking supervisions, the commercial banks will need that, and of course investors are requesting that information to understand the risks and opportunities. So as to what comes next, two things I'd say here in this great audience of impact-driven organizations and individuals. One is we have a request for information that has finished in terms of consultation about what comes next after climate. We will redeliberate in the next several months about that agenda to see how, in addition to the task of implementing appropriately S1 and S2, we're able to tackle more work in substance in what kind of industries, what kind of themes that we need to focus on for the next generation of standards coming. I think we'll be out there with results in the early part of 24, and therefore, and I cannot, I have to refrain of commenting at this stage. We haven't started the redeliberation process and are just in the middle of the analysis of the very rich feedback we received on that. The one maybe final thing I'd say for your particular audience, which I think could be of particular interest to the impact community, and I discussed that with the GSG impact leadership in the past already, is interestingly, the ISSB has embarked the legacy of the integrated reporting framework. And that integrated thinking is basically saying that the value that a company is creating for itself is inextricably linked to the value it creates, erodes, or protects for others. And as soon as you say that, it means that measuring impact on your ecosystem can actually be even relevant from an economic standpoint in this model. And I think this is where there is a specific bridge in our work, which is very high in S1. I think that is the second paragraph of S1, that relates to something where impact measurement is actually potentially relevant from an economic and financial standpoint. And I just wanted to conclude by pointing to that specific bridge that is in there, because it might be of use in the further conversations. Just want to finish by just saying that it's great that we have places and groups like the ones that you're all representing here at the GSG Global Impact Summit, because that's an important matter.
That's wonderful. Thank you. And thank you so much for the work you're doing. I know it's well supported by the folks in this auditorium. We appreciate that you took the time to appear virtually, and hopefully we'll see you in person maybe at the next one. So thank you so much, Mr. Faber. We're all very grateful.
My pleasure. Thanks for having me.